Good evening, class, and welcome to our advanced taxation class for today. Today, we are going to be taking a topic called loss and what are the types of losses that we can encounter. We're going to be looking at the rules governing loss relief. We will see something called the current year loss relief and the carry forward loss relief. Then we look at the terminal loss relief. This chapter is a very short chapter, but it is something that is worth knowing because you'll be seeing them a lot in your computation. Now, every time a business is done, there is a 50-50 chance of you making a profit or you making a loss. We say that a loss has occurred when a business has allowable operating expenses higher than its total revenue. So on the one hand, we have revenue. You need to deduct operating expenses. And if your operating expenses that are allowable by law is higher than the total revenue you generate, then you have made a loss. Or we could say um, a loss from the tax perspective. In arriving at the chargeable profit of a company, what is done is that losses from preceding year of assessment are brought forward to be deducted from the assessable profit. So it means that when you have your adjustable or your adjusted profit, which is also called the assessable profit, you will need to bring in loss from the previous year of assessment. So that's the rule. Before you treat capital allowances, you must bring loss from the previous year, if any, and remove them or charge them from the assessable profit before you can get your chargeable profit. So what it means is that the hierarchy of relief, if you have an adjusted profit, you first of all relieve your loss. You get an accessible profit after the loss relief before you can relieve your capital allowance. And when you've done that, the answer is chargeable profit or taxable profit. So capital allowance is the last thing to be deducted. Losses get deducted before capital allowances. And what are the rules governing loss relief? Section 27 of the Act, that is the Company Income Tax Act, contains provisions applicable to losses incurred by companies. Essentially, these rules are: one, the amount of loss to be allowed should be that which the revenue service is satisfied as having been incurred by the company in a trade or business during a preceding year of assessment. So it means that in a preceding year of assessment, you make a loss, the revenue service must be satisfied with that loss before you can treat it. The reference to preceding year in the wording of that section of CETA means logically current year losses cannot be relieved because the company must make profit in order to do so. The second rule here is in no circumstances shall the amount to be relieved exceed the total amount of loss incurred. What this means is that if you have a loss of 1 million, you cannot relieve more than 1 million. Now, this particular rule was in vogue in the last regime of taxes where we used to have overlap and gaps. But in this regime now, where we don't have overlap or gaps, that line or that rule does not hold because you will not encounter any instance when your total relief will be more than the loss. Then the third one is that losses can only be relieved against profit from the same trade or business in which the loss was incurred. So it means that if you have different form of business, let's say you are an enterprise and you have an accounting firm, which is a business name. You have a poultry farm with another business name. You have another um, shop or kiosk, and you decide that you are going to relieve your losses. Maybe the poultry farm has a loss. You are going to relieve it from the same line of business. From the same line of business. Also, if you are a group of companies, like say Dangote group of companies now, you have Dangote Sugar, Dangote Salt, Dangote Cement group of companies. And one of these group makes a loss. You have to relieve the loss from that line of business alone. So it means that if other lines of business makes a profit, you cannot take their profits to relieve the loss from that one that has a loss. Then we also have that with effect from 2007, losses can be carried forward indefinitely and relieved against future profits. What it means is that as long as you make a loss, you can go on carrying them, carrying them, carrying them until you make a profit. As long as the business is a going concern. Then the E part, the loss available for relief should be computed on the same basis as that of assessable profit for the year of assessment. So the losses and profits must be computed on the same basis. Preceding year basis is what we are using. All right. All right. So now that we've seen the rules governing loss, let's look at something called current year loss. We'll look at current year loss, then we'll look at carry forward loss. What is current year loss? This is one method of relieving losses. That means you are trying to charge your loss against the profit. Now, current year loss is only applicable to individuals. Individuals. In this case, losses incurred from a particular source of income can be relieved against other sources of income. So it means that if Dangote is not a company and it has Dangote sugar, Dangote salt, Dangote cement, and there is a loss on Dangote cement, profit from Dangote sugar and Dangote salt, this can be used to cover the loss from Dangote cement. Now, in order to enjoy this relief, a written claim must be made within 12 months after the end of the year of assessment in which the loss arise. So it means that if you are using, if this loss occurred in account year end, December 31st, 2022, you must have written that you are going to make a current year loss within 12 months from December 31st, 2022. So that means your letter would have been within January 1, 2023 to December 31st, 2023. That is when you are going to write that letter between that time. And we said it is only available to individuals. It is also important to note that current year loss is applicable to loss incurred in the first year only. So it means that if an individual made a loss, the first time that loss is incurred, that is the only time that it can be relieved as a current year loss. Now, what I mean is this. If I have a loss of 10 million naira from Dangote Cement and I have a profit from Dangote Sugar, 5 billion, and I have Dangote Salt, 3 million. I can only relieve that 10 million the year of assessment that loss occurred. How can I do that? I will bring all the profit, 3 million from salt, 5 million from sugar, that's 8 million, and I will bring my loss, 10 million. I can only relieve 8 million. That's the only thing I can relieve. Then what happens to the 2 million? The 2 million now will be taken to the next year. But you see, that 8 million was used to relieve from all the other source of business. But you see that remaining 2 million, it Sorry, just a moment. I would share my screen. All right, so we have been talking about carry current year loss. I'll need to explain that again due to the network issues we have. Current year loss, or yes, is a type of loss that can only be taken advantage of by individuals. Now, when an individual take advantage of this loss, he or she can relieve a loss from one type of business or source of business with other sources of income that has a profit. And this must be done for the first year in which the loss is made. After that loss has been claimed up to the extent it can, any unrelieved loss from that line of business will be carried forward and will be treated as a carry forward loss and will be only relieve it from the same line of business in which it occurred. There must be a writing that you want to apply current year loss, and it must be done within 12 months after the end of the accounting year it relates to. Then we have the carry forward loss. Now, carry forward loss can be enjoyed by individuals and companies. Now, in carry forward loss, there is no need for a written application because it is automatically granted, and the relief is granted on preceding year basis. Thirdly, the loss of a source of income is relieved against future income from the same source. The loss of a source of income shall be available for relief from the same source whenever there is an income until it is fully relieved. So you've seen carry forward loss, we've seen current year loss. When we are doing an example, we will see how it is being done. Then we have terminal loss relief. Now, there is no provision in the Company Income Tax Act for granting relief for losses by a company in any year of assessment when it ceased business permanently. So what it means that if a business ceases in a year of assessment, there is no provision in the law for granting relief when it ceases business permanently. So it means that any loss that has occurred in that year, if it cannot be relieved, that loss is lapsed. It is lost or gone forever. Now, this is different from capital allowance, whereby when we have capital allowance unrelieved, or we say unutilized, on the year of cessation, it can be carried backward for a maximum of 5 years. But for loss, we call that a terminal loss. It gets lapsed, or it is lost forever. So these are the things we should know about loss. Three things. Loss can be treated as current year loss for individuals, or as carry forward loss for both individuals and company. There is no provision for terminal loss relief for the year of cessation. And the loss the loss to be relieved must not exceed the actual loss made. Now let's look at a question. Mr. Olowalogbon established Gold Mine Fisheries Limited in 2001 for the purpose of commercial fish production. Now, because this is Gold Mine Fishing Limited, it is a company. The company commenced business in January 1, 2002. Its accounting date is 31st December each year, while its adjusted profit for the first 10 years are as follows. So here, it began 2002, but you can see they said for the first 10 years. It's not the first 10 years of business. Oh. These are the first 10 years that is given to us in this question. Because it cannot be starting in 2002 and you are bringing account in 2009. So this is what it means here. This is the 10 years that is given to us. How do we treat these losses? We are told here, compute the accessible profits for the relevant years. So what are we going to do now? We are going to get our whiteboard ready and we'll start our work. Now that's an ICAM question. This is an ICAM past question. Very, very long ICAM past question. So now let's go down. Illustration, we call it illustration 1. It's illustration 1 to us, 6.1. So this is topic, loss relief. Let me put my name down here. This is my number. All right. So we are on illustration 6.1, and this is gold mine fishing's gold mine. Is it gold mine fishes or gold mine fishery? Gold mine fishes limited. Let me bring this down here. Gold mine fishes limited. So we will say computation of accessible profits for years of assessment. We'll leave it at that. We don't know the year of assessment. We'll come back and treat it. So we will start here. Year of assessment, basis period. Then we will have accessible profits. All right, so that's the kind of thing we'll be doing. So now we have year ended 31st December 2009. What it tells us that it started from January 1, 2009, January 1, 2009 to 31st December 2009. Which year of assessment it is? You are right, 2010 year of assessment. 2010 year of assessment. So we have, okay, sorry, I should get a space for details before accessible profit. So this could be description, and this is accessible profits. So this is accessible loss, or you say loss for the year. Let me say FTY, loss for the year, and I have it as 100,000. So that's the loss for the year. Then the next year, what we have here is 2011. That should be from January 1, 2010 to 31st December 2010. And we have profit of 30,000. So we have accessible profits. We have 30,000. So you will say, now because there is no loss to be relieved here, and this is a company, any loss you have here becomes a carry forward loss. A company, you cannot relieve it from other sources. And now there's only one business, so there's nothing you can do than to carry it forward. So you will now say loss brought forward. So you have this loss brought forward here. This is 100,000 that was brought forward. Now, can you relieve this whole 100,000? Of course you can't. You don't have enough profits to relieve the loss. So what do? You will say loss relief. You can only relieve as much as your profits can carry. So watch what I'm going to do now. The loss is a negative figure. When I want to relieve it, I will use a positive figure here to relieve it. Because if I put it as negative here, it's going to increase the negative from 100 to 130. That is not what I want. I want it so that when I take away this 30 from 100, okay, you are owing 100,000 naira and you are paying back 30. So that means your owings will be 70, right? So now what I'm going to do here is going to be positive, but when I get to this side, is going to be negative. Why is it so? This Mr. Loss is owing 100,000. Who is he owing it to? He's owing it to profits. Now, somebody has given him 30,000 naira to clear part of his loss. So, what he's going to do is that he's going to give this 30,000 to Mr. Profit. So, you see here, he's paying 30,000 to Mr. Profit, who is demanding for 30,000. Meanwhile, he's owing 100,000 to Mr. Profit. But Mr. Profit just wants 30,000 now. Somebody is helping him, giving him 30,000. Please pay Mr. Profit for this year 30,000. So, how much loss are you owing, or how much money are you now owing Mr. Profit? That is the loss carried forward. Loss carried forward. So you see, this is 100. That was your loss. Take away 30, the loss will remain 70. So this is the loss carried forward. Then what happens here? This will become accessible profits. Accessible profit will be nil, because this accessible profit here, we have relieved the same amount as loss relief. So the final accessible profit is nil. So you've done for 2011. Let's see what we can do for 2012. For 2012, starts from January 1, 2011 to 31st December 2011. What were we given? 25,000 as our accessible profit. So I'll come here, accessible profit. I have it here as 25,000 naira. So what will you do? Loss brought forward. So that's a carry forward loss. You're carrying this 70,000 now. You're bringing it down here. 70,000. It's carry forward loss. Now, you are owing Mr. Profit 70,000. But Mr. Profit is asking now, can you give me 25,000? Sources anywhere, I don't want to know. Can you give me 25,000? So it means that the relief that you can grant, which is loss relief, is 25,000. It will come down here, 25,000 negative. Now, if you notice, this is different from the way we did capital allowance. In capital allowance, it was never a negative figure. It was a positive figure. And when we are relieving capital allowance, capital allowance relief is always in negative, both in this first naira sign and in the second naira sign. But if you look at loss, it is because we have written the loss as a negative figure. That is why it is like this. If our loss was written as a positive figure, we would have done it the same way with capital allowance. But I wouldn't want to do that, because it might cause a confusion as to, some people will think, why is it a loss when it is a positive? So we'll do it this way. So this is loss carried forward. Loss carried forward. So you have 70 minus 25. So that should be 45. Then your accessible profit is going to be nil. So that's for 2012. We are not asked to calculate tax, just assessable profit. So now we are going to 2013. So this is 2013. It's going to be from January 1, 2012 to 31st December 2012. So let's see what we are given. 20,000 as our assessable profit. Our assessable profit, 20,000. We will now come with our loss brought forward. Bring your 45,000 here. The same logic, you are owing 45, you are asked to pay 20. Loss relief. Pay 20. Loss carried forward. This should be 25. And of course, your assessable profit is nil. We now go to 2014. 2014 year of assessment. That will be from January 1, 2013 to 31st December 2013. What were we given? For 2013, we have 15,000. So your assessable profit is 15,000. All right? So you have loss brought forward 25,000. Loss relief is going to be 15,000. It's going to be 15,000 here. Loss carry forward, because this is going to be 10,000. Then your assessable profit will give you nil. In this loss relief question, you will be seeing a lot of nil, 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 nil. Then we go to 2015. 2015 year of assessment. 2015 year of assessment, that should be from January 1, 2014 to 31st December 2014. What were we given? We were given 35,000. That's good. Assessable profit, 35,000. Loss brought forward is 10,000 naira. Okay, so you have a debt of 10,000 naira. You can only relieve that debt of 10,000 naira. You cannot relieve the whole of 35,000 naira. So if you look at this logic here I was using before, I would change the logic now. You have a profit of 30,000 and you have a loss of 100,000. The amount of loss that you can relieve with your profit is as much as the profit can carry. As long as the profit is lower than the figure here is lower than this figure in value. It's good as saying that, okay, Let me take this logic now. You are owing 100,000 and you have 30,000 naira as profit. So this man says, the debt I can cancel for you will be as much as my profit can carry. So it means that here, this 30,000 was used to cancel 30,000 naira debt. And so that's why here is becoming nil and your debt is remaining 70. You have 70,000 here. There is 25,000 naira cash available to cancel part of it. So you relieve part of it, becomes 45. Then you have 45 remaining. There is 20,000. You can only cancel as much as 20,000. 25 will remain. You have 25 and you have 15. You can cancel as much. 10 will remain now. You have 10 and you have 35. So you can cancel the whole of the debt. So you will say loss relief will be 10,000. So you can cancel this 10,000 debt, cancel this one here. So loss carry forward will be nil. Accessible profit will now be 25,000. So your accessible profit is 25,000. We'll go to 2016. So this is 2016. So that should be from January 1, 2015 to 31st December 2015. We have 50,000 as our accessible profit. So we have accessible profit 50,000. Of course, there is no loss to be carried. So that's it. We go to 2017. That's January 1, 2016 to 31st December 2016. What were we given? Loss of 40,000. So we are giving loss for the year. We have 40,000. So this loss will be carried forward. Now you'll be asking, why didn't we bring the profit from previous years to come and relieve the loss? No, it doesn't work that way. Profit for the year ends there. You take your tax from that, your profit is shared. But your loss for the year will now be carried forward to the other year. So we now have 2018, which will have January 1, 2017 to 31st December 2017. Let's see what we are giving. We are giving 35,000. So we have accessible profit, 35,000. Meanwhile, we have loss that we are carrying forward. Loss brought forward. Okay, so this is loss for the year, carry forward. Okay, let me do the same thing for this first one. Loss for the year, carry forward. All right, so they're all carry forward loss. So now we are bringing them down here. Loss for the year loss brought forward from previous year. That's 40,000. You have 35. So your loss relief, you can already relieve 35. And I'll come here. This is 35. Then this is loss carry forward. That should be 5,000. Accessible profit. This should give me nil. All right, so we go to the last year, 2019. So that should be January 1, 2018 to 31st December 2018. And we are given 30,000 as our accessible profit. So 30,000 accessible profit. We have 30,000. Loss brought forward 5,000. So we are going to relieve the whole of this 5,000. Then this is loss carry forward nil. Then our accessible profit should be 25,000. And that's how to solve this question. So you see how losses is being carried forward until it is done. All right, so that's the first question. Let's see another question. This says Rodan Nigeria Limited has been in business for several years. The company makes up its accounts to 30th June every year. So if you look at it, this is 30th June every year. The audited accounts for the year ended 30th June 28 to 30th June 2012 contain the following. These are all the things it contains here. Balancing charge, interest on savings, and all that. All right, so what is going to happen? You are required to compute the total profit and tax payable by the company for the relevant years of assessment. Meanwhile, in this particular question we did the first time, we didn't put the relevant years of assessment. So it's ending at 2019 and it started from 2010. So you come here and put 2010 to 2019. So that's how you do this. Let's go to illustration 2. Illustration 2. Illustration 2. Rodan Nigeria Limited. Rodan Nigeria Limited. All right, what are we asked? Compute the total profit tax payable by the company for the relevant year of assessment. Total profit tax payable. Computation of total profit and tax payable for years of assessment. So what we'll do now, let's try and look at the year of assessment here. Let's say this is year of assessment. This one is 28, so this should be 2009, 2010, 2011, 2012, and 2013. So 29 to 2013. So years of assessment 2009 to 2013. All right, so now that we've done that, we put our Naira sign here, put another Naira sign here, and we'll start. Year of assessment 2009. We are told 30th June every year. So that means it must have started in July 1, 2007 to 30th June 2008, preceding year of assessment. So what do you have? Profit. Profit. So this can be your profit. So you can say profit, so loss. So that's loss here, 60,000. So we have 60,000 here. We have interest on savings is 4,000. Interest on savings, 4,000. Interest on savings, 4,000. Balancing charge is also an income, 2,000. So you see how it's used to relieve it. So when you add them together, you have nil. Then you have your capital allowance for the year. That's 20,000. You cannot relieve it. So you will say, so this is carry forward 20,000. So that being so, your total profit is going to be nil. Tax. We've done for 2009, 2010, 8 to okay, so this is for 2010 from July 1, 2008 to June 30, 2009. Okay, so how do we do this? We'll simply, let's rule this off. We were given profit 200,000. So we have profit to this side now, 200,000. We also have interest 6,000, balancing charge 5,000. Interest on savings, 6,000. Balancing charge, 5,000. When you add all of these, this is 6 plus 5 is 11, 211,000. Okay, so I can call this one here accessible profit. Okay, so we don't bother about the capital allowance if it is 2/3. Let's not think about 2/3 of capital allowance. Or we can as well do the 2/3 of capital allowance, no problem. But we have capital allowance here, 20,000 here. So you start with that. Capital allowance brought forward. You have 20,000. Capital allowance for the year. That's 24,000. So 24,000. You add them up, this should give you 44,000. So this is capital allowance claimable. Capital allowance claimable. Then capital allowance relieved. Capital allowance relieved. Of course, the maximum should be 2/3 of 211. If we are to look at 2/3 of 211, so 211,000 times so so you can see the way capital allowance is being relieved. We put the two of them as negative figures, unlike that of profit loss, where we use positive to relieve it from the loss and negative from the profits. So your capital allowance carried forward here will be nil. Means you have utilized everything here. Then your accessible profit at this time will be 214, 211 rather, 211,000 minus 44,000. That will give me 167,000. 167,000. And of course, your CIT at 30%, CIT of 30%, so 0.3 should give me 50,100. Let me write my CIT here, 50,100. So that's it for this particular year, 2010. We'll go to 2011. 2011, that means it must be from July 1, 29, okay, July 1, 2009 to 30th June 2010. What were we given? Profit 240. Profit is 240. Profit 240,000. What again are we given? Interest 8,000. Interest on savings 8,000. Add them 248,000. That should give you accessible profit. Then you have your capital allowance for the year because there is no brought forward. The capital allowance is just 28,000. Two third can never reach up to 248. Two third will always be bigger than this 28,000. So I'll just take it down here, 28,000, and I will just relieve it. Why I didn't do it here and do it that way is because this whole 28,000 will still be relieved. So I'm just showing you various ways in which you can do that. And now your accessible profit will now be 108. Okay, let me not assume. 248 minus 28. Oh, 220. Wow, I didn't look at it before. 220. So this is accessible profit. Your company income tax at 30%. 220 at 30%, which is 66,000. If you are to do your tertiary education tax, let's do this. Tertiary education tax at that time it was 2%. It is not going to be 2% of this. It's going to be 2% of this. So 2% of 248,000. So let's do this one, the tertiary education tax. We decided not to do for the others. You can as well do for all of them. It was deliberate that we didn't do that. So henceforth, let's be doing it. 4,960. Okay, so we've done now for 2011. Let's do for 2012. So that will be for July 1, 2010 to 30th June 2011. What were we given? Loss of 180. loss 180. What else are we giving? Interest on savings 7,000. Interest on savings 7,000. That means this negative figure will reduce by 7,000, so it will become 173,000. Assessable loss. Capital allowance has been treated, so capital allowance will not be carried forward. So you will now bring your capital allowance for the year, which happens to be 40,000. This 40,000 cannot be relieved. So you would say it's carried forward. So this is carried forward. So you have assessable profit nil. CIT at 30% nil. Tertiary education tax at 2%. 2% of you cannot do of assessable loss. So it's going to be nil. Then we'll go for the last year, which is 2013. So this is going to be 2013. It will start from July 1, 2011 to 30th June 2012. What were we giving? Profit 300,000. Profit 300,000. Interest 10,000. Balancing charge 3,000. Interest on savings 10,000. Balancing charge 3,000. When we add all of these, this gives me 313,000. This is assessable profit. The next thing is to bring your loss relief 173. So you treat loss first before capital allowance. Loss brought forward 173,000. Can we relieve it? Yes. Loss relief 173,000. 173,000. Notice this is positive now, this is negative. Loss carry forward nil. Okay? Assessable profit. So what do we do now? 313,000 minus 173,000. That gives me 140. So this is my assessable profit 140. Then it's time for capital allowance. So I bring the capital allowance carried forward 40,000. So I will say capital allowance brought forward 40,000. Capital allowance for the year is 32,000. So I'll say capital allowance for the year is 32,000. When I add them together, it gives me 72,000. So this is capital allowance claimable. So this is what you can claim. Capital allowance relief. The highest we can do is 2/3 of 140. So 140 times 2 divided by 3. 93. So it's even higher than this 72. So we'll take the whole of the 72,000. So 72,000 can be relieved. So you see in capital allowance, we do the two of them negative, put brackets in both of them. So now capital allowance carried forward is nil. We have our accessible profits. So 140 minus 72, 140 minus 72,000, that gives me 68,000. So this is 68,000 accessible profits. Company income tax at 30% of 68,000. So this is times 0.3. That gives me 20,400. So this is 20,400. Now, tertiary education tax at 2% of what? Cannot be of this accessible profit. It cannot be. It must be this. 2% of 140. 2% of 140. Okay? It also can't be this. The first accessible profit we had is 313. This is before the loss relief and the capital allowance. So the very first accessible profit is where we are charging our 2% on. 313. 313,000. So we'll do that now. 313,000 times 2 divided by 100. That gives me 6,260. So that's how this question is being handled. That's question number 2 for loss relief. Question number 3. This question is loaded. Very, very loaded. Let me look at the question number 4. Question number 4 is also an ICANN past question. I'll prefer to, okay, Let's take this question number 3 first. Rice and beans are two segments in Korede Nigeria Limited. The two segments' profit and loss returns have been dwindling for several years. The management is concerned of the situation of the two segments and has consulted you as a tax expert to help provide guidance on and advice on ways they could adopt to address these lingering issues of dwindling returns. The following details were presented. We have rice segment. This segment was relatively stable prior to government banning of rice importation in the country. Profit moved from positive to negative. The financial details of the segment are as follows. So year ended. So what we'll do here is we'll look at the year of assessment. So this is year of assessment. Let me change this color to something brighter that will be seen. Year of assessment. So this is ending in 2013. So this should be 2014, 2015, 2016, 2017, and 2018. Wow. Now look at beans segment. Beans segment has always been a problematic segment because of the returns on investment is relatively low and management is considering scrapping segment. In 2006, year of assessment, the segment began to increase tremendously. What they meant is not 2006, it's 2016, as can be seen from here. This as a result of new technology introduced in the production of beans. The management of the company is therefore contemplating whether to continue the beans segment or not. The management has put this to vote and majority of the board members supported the move to continue operating segment due to recent developments. The following result relates to the segment. So this is tax year. It is also called year of assessment. It is also called the year of assessment. So this one started from 20, this is from 2014 to 2018 year of assessment, while this is from 2015 to 2019 year of assessment. There's no balance here. The consultant, as a consultant, given that the company's financial year end is 30th of September annually. So what it means here is it starts from October 1, let's say X1 to 30th of September X2. That is how the year of assessment is. You are required to advise management of the company appropriately using the relevant tax law to compute a company's assessable profit and loss. We are not asked to compute tax, assessable profit or loss. So Korede Nigeria Limited is the name of the question, and this is taken from an advanced tax textbook from Akin Bobola Christopher, 2021 edition. This is 2021. 2021, pages 133 to 134. So let's take a different color. I'll say this is Akin Bobola text book, page 133 to 134. So this is Korede, Nigeria Limited. So this is a company. So what are we looking for? Accessible profits for years of assessment. You will now start. Where is the earliest? Sorry, where is the earliest? I'll need to bring this one down to the whiteboard. The earliest is 2014 and the latest is 2019. So you say 2014 to 2019. So how do we do this? We have two segments. Rice started before beans. So I will say this is rice. This is beans. This is total. Or I will call it group. So you can call it group, you can call it total, or you can call it company. Let me call it group. So it's like Dangote cement. This is like Dangote rice, Dangote beans, and Dangote group. So we start with the years of assessment 2014. Year of assessment 2014. We are told it ends in September. So it will start from October 1, 2012 to 30th September 2013. So because beans has not started, rice started, year of assessment, you see where it ended? That's fine. All right. The accessible profit is 6 million. So I will say accessible profit okay, let me put my Naira sign here. So this is 6 million. Of course, there is dash, and the group is 6 million. That's it. We found the accessible profit for that year. All right, we go to the next year. Year of assessment 2015. Of course, that will be from 1st of October 2013 to 30th September 2014. Are we giving profit? Accessible profit is 1.2 for rice. So we have accessible profit 1,200,000. Let's check for beans. Do we have anything for beans? In that year, we have a loss of 4.5 million. So for profit, you have a dash, Accessible loss, we have dash here, we have 4.5. So this is 1.2, this is 4.5. Now, because this is a company, you cannot relieve this loss from of beans from rice. So this must be carried forward. This must be carried forward until beans has a profit to make. So the group will not add the profit and net off the loss. It will show the profit, it will show the loss. No net off, because the group will not be paying tax. So that's it for that year. You go to the next year, year of assessment, 2016. That will be from October 1, 2014 to 30th September 2015. Let's see what we have for rice. Which year are we doing? 2016. Rice now made a loss of 3 million. Beans made a profit. So I'll start with the profit first. Accessible profit. Rice made a loss. Beans made a profit of 1.5. So we have 1.5 here. So we have 1.5 here. Then we have accessible loss. Now, rice made a loss of 3 million. Rice made a loss of 3 million. Now, this is the first time rice is making loss. It made profit the last time. So it will not carry this loss until whenever it has a profit. So this loss is carried forward. But now, look at beans. Beans had loss before of 4.5. It now had a profit. So it's going to bring that loss now. You would now say loss brought forward. There's no loss brought forward here. Loss brought forward here is 4.5. So what will happen now? Loss carried forward. So you see now, we use logic. You have a profit of 1.5 and you have a loss of 4.5. If you use your profit of 1.5 to settle part of the loss, 4.5, how much loss will you carry forward? You will carry forward 3 million. So your loss to be carried forward is 3 million. So this is the loss that is going to be carried forward. So what will be your accessible profit here now? Accessible profit will now be nil. to now be nil. So it means there is a nil profit here as against all of this. So there's a nil profit for the group. You now go down to 2017, year of assessment 2017. To start from October 1, 2015 to 30th September 2016. Now, Rice is still making a loss, 4 million. That's 4 million is 217. 3,750 profit in beans. 3,750 profit. Accessible profit. That's new. That's 3,750. Instead of me writing nil like this, let me just put, I can write nil if I want to, but let me put a dash. So that in the group, we have 3,750 in the group. Okay? So what happens? Accessible loss for 2017 year of assessment, 4 million. So we have 4 million here. So we have 4 million here. Then we have loss brought forward. Loss brought forward here is this 3 million. So you come here, 3 million. Can as well bring the 3 million here. Okay? Now, this 3 million, let's say loss relief. Let's do it this way now again. Loss relief. Cannot relieve any 3 million here. You can relieve only 3 million here. So here, you come here, the same thing, put it in positive. As you do it here, I put it like that, positive in the group. So loss carry forward now, there is no loss carry forward. Or we can say loss carry forward. This loss will be carried forward here. This particular loss is a carry forward loss. There will be no loss here. So if you look at it now, this has cancelled this. This is the loss that is being carried forward. And how did this cancel this? It is through the 3 million from here that is used to cancel it. So we have accessible profit. So this is the best way here. Accessible profit here is dash. Accessible profit now will be 750,000. So for the group is 750,000. So you see here, there is no accessible profit. That's why it is dash. There's only a loss which is being carried forward. Here there is 3,750, and we have a loss of 3 million. So when you take away 3 million from this 3,750, you have 750. Now this is the actual taking away of the 3 million from it. So it's not going to be this minus this plus this. No. This is being relieved here. So this is as good as not entering here. So this is as good as not entering here. You just put it straight. It's as good as not entering here. Well, let's just put it. But note that is as you are taking it from here, you're also taking it from here. It's preventing us, when we are doing one segment, we usually put 2 naira sign, right? If this were to be a longer book, we would have had 5 naira sign. One of them for this rice, another one in the middle here, another one for beans, another one here. Then the last one will be for the group. So, but it's because this is not a long book, it's not going to be done that way. The next year is 2018. 2018. 2018 year of assessment is October 1, 2016 to 30th September 2017. We are doing 2018, right? Rice also made a loss, 1 million, 6 million profit. Accessible profit, beans, rice, beans is 6 million. For the group is 6 million. Accessible loss, rice made 1 million loss. All right. What do we need to do? Loss brought forward. Loss brought forward. What is the loss we are bringing forward? We are bringing forward for rice 4 million, for beans nothing. Loss brought forward 4 million. Here nothing. So this 4 million here. We cannot relieve it. So I'll come here, I'll say loss carried forward. It will now be 5 million that I'll be carrying forward. And here is dash. If I were to do the same thing here, accessible profit, here is nil, here is 6 million. So for the company, it's 6 million. So we go to the last year, 2019. Year of assessment, 2019. Basis period, 1st of October 2017 to 30th September 2018. Of course, rice didn't do anything. Beans had 8,250. Accessible profit, 8,250. Then we have our loss brought forward, 5 million, and we'll still carry forward again. That is dash. So this is a 5 million carrying forward. So your accessible profit, your accessible loss. So you leave it like this. So that's how it's going to be for the company. Okay. Now, the question is saying in part 2, assume this information belongs to Aderoju Enterprises. Will your advice be different? Okay, so first of all, what is the advice? As a consultant, you are required to compute, yes, the accessible profit. Which advice are you asking to do? They were about to scrap the beans company. They were about to scrap the beans company because it is making loss before of this big loss. We're about to scrap it. So what we advise be, your advice would be, do not scrap beans. So I will come here, advice, do not scrap beans segments. So now let's see what will happen if it is Aderoju Enterprise. Aderoju Enterprise. Now this is an individual stroke sole proprietor. So our carry forward loss and current year loss will apply. So this is going to be group. This is going to be beans. This is going to be rice. This is going to be year of assessment. This is going to be description. I don't need to start writing the basis period anymore because they are all the same basis period. So I'll start again with 2014. There was only rice, 6 million. So this is 2014. Accessible profit, 6 million. And this is 6 million. Go down to 2015. Accessible profit. Rice is 1.2, 1,200,000,000. What about beans? Beans came with a loss of 4.5. So I will come here, accessible loss, 4.5. All right. Now we said that these beans, you can only relieve as much in the current year loss from rice. So we can say loss relief. So we can take here 1,200,000. That is part of this. So what it means here is this is 1,200,000. So this 1,200,000 here is this same 1,200,000. You are taking it from beans to relieve from rice. So it means that 1,200,000 is being relieved here. So to speak. So this 1,200,000 is relieved here. So loss carried forward. Here will be dash. How much will be removed here? It will be 3,300,000. 3,300,000. This 3,300,000 is carried forward. Then we have our accessible profit. Accessible profit. This is going to be nil. And this is also going to be nil. The group aspect is not needed because we are only seeing rice and beans segments. So just understand what is going on here. Now, we had 1,200,000. We've taken this 1,200,000 to relieve beans, part of it. And so we have nil in rice now. So it means that rice helped to pay part of beans' debt. Now, beans received from rice this debt, this money to clear part of its debt. So it means the remaining debt carried forward is 3,300,000. Of course, it didn't have accessible profit before, so both of them are nil. Now take note, this 3,300,000 will only be relieved when beans have anything, any profit. It cannot be relieved from rice anymore. So let's go now to 2016. 2016. For rice, what happened in rice? Rice now made a loss, 3 million. Wow. Meanwhile, 3 million loss, beans made a profit 1.5. So I have accessible profit 1.5, accessible loss 3 million. So let's forget about the total. Now we have loss brought forward. Dash here 3.3. 3.3. All right. Now, loss relief. Now, I want you to watch. Loss relief. Now, we said whenever there is a loss for the year, you see this 3 million here, it can be relieved from this 1.5. It can be relieved from this 1.5. So you take 1.5 here and relieve it. So it means here 1.5 is going down. So it is this one that is being used here to relieve this. This one is not being relieved. So we will say loss carried forward. So when we take 1.5 from 3 million, of course, 1.5 will be carried forward, and this 3.3 will also be carried forward. So they will always be relieved from their um, line of business. So what happened? Accessible profit, accessible profit becomes nil, becomes nil. That's for 2016. We go for 2017. 2017, Beans made a profit of 3,750. So let me just write it now. Accessible profit, Beans made 3,750. Rice made how much? Rice made a loss, 4 million. So dash. Accessible loss, 4 million. Dash. Now we say loss carried forward. This is 1.5, and here is 3.3. So what do? We said the current year loss should be relieved. So we have loss relief. We have 4 million here. It can only be relieved from this 3,750,000. So we have 3,750,000 will be relieved. 3,750,000. Okay. So what will happen now is loss carried forward. So when we have 4 million and we relieved 3,750,000 from it, we have 250 still left. Now 250 is left, and we also have 150 from previous. So 250, then we add your 150, it becomes 400. So 400 is being carried. So this is what is being carried. You carry your 3,350,000 because you cannot do it, you didn't do anything about it. 3,300,000. Then your accessible profit, nil and nil. Then we go to 2008. We also know we had a profit in beans. Beans is 6 million. Beans is 6 million. Rice is dash. Accessible loss for rice happens to be 1 million. That's for 2018. So we have our loss brought forward 400 and 3,300,000. So we have 400 here, 3,300,000. Now, loss relief. We will take 1,000 naira, 1 million naira from here to relieve this one for the current year. So we'll start, this is, sorry, all right, so we'll take 1,000 or 1 million. Here will remain 5 million, right? Then we'll also take it to remove 3,300,000. Right? So what happened now is loss carried forward. Of course, this 1 million is being relieved. 400 is being carried forward. Okay? Then, what about this? The whole 3.3 is being relieved. So, nil. Nothing is carried forward. Then, what is your accessible profit? The accessible profit, of course, here will be nil. How much will this one be? We have 6 million here, and we took 1 million to relieve that of rice, remaining 5 million. We then took 3,300,000 to relieve its profit. So we have 1,700,000 remaining. 1,700,000. This is your accessible profit. Then of course we have 2019. 2019, we have accessible profit, that of beans, 8,250,000. So this is nil, 8,250,000. Then we have loss brought forward 400, nil. We can say loss relief. Of course, this is nil. You don't have anything to relieve it. This is nil. Loss carried forward will be 400. And this will be nil. So your accessible profit here will be nil, and here will be 8,250,000. Now, in this case, now you're going to scrap beans. Advice: do not also scrap beans. That's our advice. So that's it there for illustration 3. Looking at illustration 4, this is another I can pass question. It's an old question. So what do we do? Mr. Igbota has been in the business for years, and his accessible profit and loss were as follows. So this is year 2. What we should do here, we'll just put our year of assessment. Let me change this to this color. So this is year of assessment. This should be 2003. This should be 2004. This should be 2005. This should be 2006. This should be 2007. And this should be 2008. So this is also years of assessment too. So I will draw the line straight to it so that for visibility. You were required to compute the total income for the relevant years of assessment. Total income, that is the chargeable income. So how do we do this? This is our illustration 4I campus question. This is taken from Ofyong U. Bassi textbook. So I will go down here and do it here. This is too light. All right. I'll say this is from Ofyong U. Bassi text. Page 135, 315 rather, 315, page 315, question 11.7, page 315, question 11.7, page 315, question 11.7. All right, what's the name of the company? Igbo Better. Igbo Better. Now, this is a business name, not a company. Igbo Better. So we are looking for total profit for 2003 to 2008. Total profit for years of assessment 2003 to 2008. I think I need to change this color. All right. So let's get it done now. All right. So this is December ending. So 2003. So the first one here is year of assessment 2003. Of course, this is from January 1, 2002 to December 31st, 2002. So we have accessible profit. Now this is accessible loss 120. So since this is the first one here, this is accessible loss carried forward 120,000. Then the capital allowance will also be carried forward because it cannot be claimed. 14,000. We bring it down here. 14,000 will also be carried forward. We'll go to 2004. Year of assessment 2004. Of course, it's from January 1, 2003 to 31st December 2003. We have accessible profit of 15,000. Accessible profit 15,000. Loss brought forward. Now we have a loss brought forward of 120,000. How much loss can we relieve? Loss relieved should be 15. So this is loss carried forward. So 105. So this is the loss carried forward. So we have accessible profit. Now this is nil. Then you have capital allowance brought forward. The capital allowance brought forward was 14,000. So we'll bring it down here. 14,000. For the year is 70. So as I'm doing it, I'm ticking them off. I've done with this, I'm done with this, I'm done with this, I'm done with this. 70,000. Let me write the 70,000 here. So this is capital allowance for the year. You add them together, you have 80,000, 84,000 rather, 84,000. So this is capital allowance claimable, 84,000. But you cannot relieve it because there is no accessible profit. So, but it's carried forward. So you carry this forward. So now your total profit will be nil. In the case of this other one here, I'll need to write total profit. Total profit is going to be nil. We've just done 2004, so the next one is 2005. 2005, of course, is going to be from January 1, 2004 to 31st December 2004. So what do we have? 45,000 as profit. Accessible profit. Okay. 45,000. Do we have any loss that we have been carrying forward? Loss carried forward is 105. So we'll bring the loss now. Loss brought forward 105. Loss relief. We can already relieve 45. So this is loss carry forward should be 60. Then the next thing will be accessible. So this is accessible profit will be nil. Then we have capital allowance brought forward. How much are we bringing forward? How much are we bringing capital allowance brought forward? We are bringing 84,000. Capital allowance brought forward is 84,000. Capital allowance for the year 22,300. 22,300. When you add them together, this will give me 106,300. So this is capital allowance carried forward. This is claimable carried forward. Total profit nil. Total profit is nil. Then we go to the next year. We just finished doing 2005. So we'll go to 2006. Year of assessment 2006, January 1, 2005 to December 31st, 2005. Am I writing? All right. So what do we do? Do we have any profit? Which year are we doing? We are doing 2006. 2006, we have a loss, 30,000. So I'll say accessible loss 30,000. Loss brought forward. How much was the loss brought forward? Carried forward before. Carried forward loss is 60. We are now going to bring it forward. 60,000. So it becomes 90,000 that will be carried forward. Loss carried forward 90,000. Capital allowance brought forward. How much is the capital allowance brought forward? 106,300. 106,300. Capital allowance for the year, 35,000. Capital allowance for the year, 35,000. So this gives me 300 here. This is 11, this is 4, 141, 300. So this is capital allowance carried forward, 141,000. Then our total profit is going to be nil. Most of the loss relief questions, you'll be seeing a lot of nil. Then we are going to do 2007 now. Year of assessment, 2007, January 1, 26 to 31st December 26. Was it a loss or a profit? 26 is a profit of 50,000. Assessable profit, 50,000. Loss brought forward. How much loss did we carry forward before? 90. So we'll bring the 90 now. This is 90. Loss relief, we can only relieve 50. Loss carried forward, that should be 40. Then we have accessible profit. That should be nil. Then what about capital allowance? Capital allowance brought forward. How much is that? 141,300. 141,300. Capital allowance for the year, how much is it? 40,000. So we take it down, 40,000. Okay, that will give me 181,300. So this is capital allowance carried forward. Total profit, nil. That's the sort of things you'll be seeing in loss relief. And we'll go to the last year, which is 2008. Year of assessment, 2008. So it's going to be January 1, 2007 to 31st December 2007. Did we have a profit? Yes, 120,000. Accessible profit, 120,000. Loss brought forward. How much was the loss brought forward? 40,000. So we'll take that. 40,000 was brought forward. Loss relief, 40,000. Loss carried forward, nil. Accessible profit. Accessible profit will now be 80,000. For the first time, we are recording accessible profit. Then we'll come to capital allowance. Capital allowance brought forward. We have 181,300. 181,300. 181,300. Then we have capital allowance for the year, 52,000. 52,000. When you add them together, this will give me 300. 3, 8 plus 5 is 13. 233, 300. So this is capital allowance claimable. Now, capital allowance relieved is going to give me 2 over 3 of 80,000. So I have my 80,000 here times 2 divided by 3. 53,333. So I will write 53,333. That is what I'm going to relieve here. 53,333. Then my capital allowance carried forward 233,300 minus 53,333. That gives me 179,967. Okay, so I have total profits 80,000 minus 53,333. Now this will give me 26,667. 26,667. Although we are not asked to find the tax liability, at this point, if you want to find your tax liability, you can say your CIT at 30% of 26,667. What would that give me? That will give me times 0.3. That will give me 8,000. my tertiary education tax at 2% of how much? This assessable profit. This first one, 120. 120,000. So 2 over 100 times 120. That will give me 2,400. Although we are not asked this, I just did this for completeness. So you see here, this first assessable profit you have is what we will charge our education tax to. The same thing comes here. Even though we have a nil profit here, our CIT will be 0, but our education tax will be 2% of 50. The same thing here. Okay, there will be no education tax here and no CIT. This other year, 2005, there will be no CIT, but there will be education tax 2% of 45,000. In this other year, 2004, there will be education tax of 2% of 15, even though there is no CIT. And in the first year, there will be no CIT, no education tax. Now, this is how this is being done. So, what have we learned so far? We have learned the rules governing losses. Losses are first treated before capital allowances. There are two kinds of losses: carry forward losses, which is enjoyed by both company and individual, whereas your losses are carried forward to be relieved from the same line of business. And we have current year losses. Current year losses is only enjoyed by individual, which must be claimable within the 12 months after the end of the accounting year. And that is enjoyed when they have a loss, they can be relieved from other lines of business in that year alone. And the unutilized or unrelieved loss becomes a carry forward, which must be removed from only that line of business. When you remember all of these, and we see all the things we solved here, both for business and for individual, you should now remember the rules governing losses. So I think I will give you an assignment. The assignment here is to go the to ICANN study pack for skills level. ICANN study pack for skills level. Do not look at the answers. I want you to look at this example, this illustration here. This on page 293. Look at this illustration here. It's similar to what we did. They give you the year of assessment and they give you the losses. But note here that because they didn't put it in bracket, they wrote loss, on your own, you put them in brackets. Put them in brackets so that you don't make a mistake. So that's one tip here. Put them in brackets. Then The next thing to do here is to do the year of assessment like we usually do. So this is 2013, 2014, 2015, 2016, 2017, and 2018. And that corresponds to 2014 to 16. 17 and 18, we have no capital allowance. So I can come here and say 2017, 2018. Let me put 0, 0. So these are the things you are going to do. You are asked to look for the assessable profit for 2013 to 2016. Ignore minimum assessment. So it means that you are going to concentrate your effort from here to here. So these are the ones you concentrate. So you come down here, you concentrate on 2013 to 2016. This is where 2016 ends. So you concentrate here. So this is the ones you are doing. These are the ones you are doing. So these are the ones you are doing. Then the ones you are not doing, you are ignoring. You ignore what we did here. You ignore this. You ignore this. You ignore this. So that's what you are going to do. And we will not solve it here. I know you know the answers. But let me just tell you, even if we are not solving, this 35,350 will be carried forward as a loss. It will now join with this to make it 600 to be carried forward. It will join with this 457 to be carried forward, and we join with this 75 to be carried forward. So at the end of 216, the total of all of these will be the losses carried forward. The capital allowances will also be carried forward for the whole year. And so your tax liability, your assessable profit for each of them will be 0. Your company income tax for each of them will be 0. Your education tax for each of them will also be 0. So that's it. So we solved this question, but I want you to do it in your own book and actually solve it. We've solved it here. And with that, we come to the end of today's class. We've seen loss relief. In the previous chapter, we've seen capital allowances. We've seen basis period. And we've looked at commencement rule, cessation rule, change of accounting date. In our next class, we are going to see how we can treat tax liabilities. So it means there now that in our next class, we'll be combining our knowledge of basis period, capital allowances, loss relief into solving a question. So it means we are going to bring a past question that comprises all of these things, one or two of them, and see how we solve them, and that will be for the next class. After that, we'll be looking at another topic that will be tested in your exam so that you improve your efficiency. So thank you so much for coming to today's class. Okay, as I said, this is skills. Let me write it here. This is skills level taxation study pack, loss relief, and the page is 293. So this is 293, page 293. So in case you want to visit it, you can also visit it and see other things here. It's the same study pack you have in the professional level, but this is another question you need to observe and do. All right, so thank you so much for coming to class, and I'll see you again in our next class when another topic will be dissected. Do have a lovely day.